Welcome to our Chinese Finance and Economy Briefing Program. Today, we dive into some intriguing stories shaping the economic landscape. First up, a skyscraper collapse in Bangkok linked to a Chinese company has raised eyebrows and led to a wave of censorship from Beijing. The incident has left authorities scrambling, with investigations underway into the potential construction flaws and the fate of those still missing. Next, we shift our focus to Hong Kong, where officials are asserting the city's status as the safest place in a chaotic world. Zheng Yanxiong, a key figure in the region, emphasized the need for innovation and reform to strengthen Hong Kong's role in education and technology while aligning with national strategies for growth. Lastly, we explore China's growing enthusiasm for open-source AI technology, which could reshape its competitive edge against the US. However, this strategy comes with its own set of challenges, including balancing innovation with national security. Please stay tuned for more detailed coverage. Australian Broadcasting Corporation reports that the collapse of a high-rise building in Bangkok has sparked significant concern and censorship from Beijing, particularly affecting the Chinese company involved, China Railway No. 10 Limited. The building, intended to house the Thai government's state audit office, crumbled after a distant earthquake, raising suspicions about construction quality reminiscent of the notorious tofu construction seen in China. As investigations unfold in Thailand, the Chinese company has deleted posts about the project from its WeChat account, while netizens have preserved evidence of its previous celebratory announcements. With 15 confirmed deaths and many still missing, the plight of Burmese workers on the site highlights the human cost of the disaster, as families search for answers amid the rubble. South China Morning Post highlights the reassurances from Zheng Yanxiong, Beijing's top official in Hong Kong, who emphasized the city's stability amidst global chaos during a closed-door meeting with local leaders. Zheng's message aimed to quell anxieties while promoting the advantages of the one country, two systems policy, encouraging officials to focus on innovation, development, and improved governance. He urged Hong Kong to enhance its role as a hub for education and technology, linking it to broader national strategies. Following this meeting, Chief Executive John Lee expressed a commitment to deepening international collaboration and reform, aiming to solidify Hong Kong's position as a bridge between global markets. Reuters Breaking Views discusses China's strategic embrace of open-source AI, which allows the nation to circumvent US tech restrictions and foster rapid advancements in artificial intelligence. Major Chinese tech firms are leveraging open-source models to enhance their capabilities while maintaining a competitive edge. However, this openness may soon face limitations as Beijing tightens control over technologies critical for national security. The article suggests that while open-source initiatives can bolster China's global standing and innovation, they may also hinder profitability for companies reliant on free models, raising questions about the long-term sustainability of this approach. As the country aims for technological self-sufficiency, the balance between openness and protectionism will be crucial in shaping its AI landscape. South China Morning Post reports on the escalating trade war initiated by US President Donald Trump, which has significant implications for China's economy. With the announcement of a staggering 34% tariff on Chinese imports, analysts fear this could be a worst-case scenario for China, potentially leading to a maximum effective tariff rate of nearly 70%. The tariffs, which come on top of previous increases, are expected to severely impact China's GDP growth targets, pushing policymakers to stimulate domestic demand to counteract the anticipated drop in exports. China's Ministry of Commerce has declared its firm opposition to these unilateral measures, labeling them as typical examples of unilateral bullying and warning of potential retaliation while emphasizing the need for equal dialogue in resolving trade differences. South China Morning Post also highlights the turmoil within Apple's supply chain in China as the new tariffs take effect. Major suppliers such as Gore-Tex and Luxshare have seen their stock prices plunge by the maximum daily limit, reflecting the immediate financial impact of Trump's tariffs on the tech giant's operations. Apple's reliance on Chinese manufacturing, with a significant majority of its suppliers based in the country, underscores the vulnerability of global supply chains amid rising trade tensions. CEO Tim Cook's recent reaffirmation of Apple's commitment to the Chinese market contrasts sharply with the challenges posed by the tariffs, which threaten not only Apple's profitability but also the broader economic stability of its suppliers in China. Nikkei Asia reports on China's strong condemnation of Trump's tariffs and its vow to retaliate, emphasizing the potential economic fallout for both nations. The Chinese government has criticized the US for ignoring the benefits of global trade and has indicated that it has various tools at its disposal for retaliation, including imposing equal tariffs and devaluing its currency. Economists predict that the average tariffs on Chinese exports to the US could exceed 65%, which would severely strain China's export-driven economy. With the end of duty-free treatment for low-value goods, many Chinese e-commerce suppliers face significant challenges, leading to fears of a broader economic downturn. Observers suggest that the trade war may prompt a shift in global trade dynamics, with countries moving away from reliance on the US market and seeking to strengthen regional trade relationships instead. South China Morning Post reports on the recent turbulence in the Chinese financial markets instigated by US President Donald Trump's announcement of reciprocal tariffs. In response to these developments, China's central bank has set the yuan's fixing rate at its lowest since January, reflecting the currency's pressure after the 34% tariff hike on Chinese imports. Investors have flocked to gold as a safe haven, pushing prices to record highs, while the People's Bank of China, PBOC, is striving to stabilize the yuan amid this volatility. Analysts suggest that this adjustment indicates the central bank's willingness to allow some flexibility in the yuan's exchange rate, which could help mitigate the impact of the tariffs. In another article from the South China Morning Post, the focus shifts to the effective tariff rates imposed by the US on Chinese goods, which have soared to around 65% following Trump's latest tariff announcements. This includes a combination of new tariffs and previous ones, significantly affecting US-China trade. Analysts warn that such high rates could be prohibitive for trade and could lead to a collapse of the global trading system. Countries like Vietnam also face heightened exposure to these tariffs, raising concerns about the broader implications for international trade dynamics. The Australian Broadcasting Corporation highlights the ramifications of Trump's tariffs on Australian exports, noting a baseline 10% tariff on all US imports. Australian Prime Minister Albanese expressed strong opposition to the tariffs, emphasizing their illogical basis and the importance of maintaining Australia's trade agreements without imposing reciprocal tariffs. He reassured that the government would protect key sectors and consider dispute resolution measures under the existing free trade agreement with the US. The situation underscores the complexities of international trade relationships and the need for Australia to negotiate effectively to safeguard its interests amidst these global economic shifts. South China Morning Post reports that Hong Kong stocks have plummeted to a 6-week low as fears mount over US President Donald Trump's proposed tariffs, which include a staggering 34% reciprocal tariff on China and a minimum of 10% on all trading partners. The Hang Seng Index fell 1.6% to 22,826.66, marking its lowest close since February 20. Export-oriented companies faced the brunt of the decline, with apparel maker Shenzhou International plunging 16% and Lenovo Group dropping 5.3%. Major players like Alibaba and Tencent also experienced significant losses, retreating by 3.4% and 2.1%, respectively. The announcement, termed Liberation Day by Trump, prompted global traders to seek safer assets, driving gold prices to new heights. As the S&P 500 and Nasdaq futures fell sharply, concerns over a potential derailment of China's fragile economic recovery loomed large, with experts warning that the cumulative 54% tariff could dampen risk sentiment and push investors towards safer government bonds. Thank you for tuning in. The content above showcases the latest briefing reports and analytical synopses, thoughtfully curated by the 6Do team. These insights stem from a wide array of reputable media outlets, think tanks, government sources, and specialized experts worldwide. We encourage you to explore these sources for a comprehensive perspective. Keep in mind that while the content may not always align with the official standpoint of 6Do Brief, it's not meant to be taken as absolute directives for decision-making. Comprising seasoned media professionals, learned scholars, and accomplished scientists, the 6Do team embodies a trailblazing, fully independent media entity. To customize 6Do Brief to meet your professional needs, you have the option to subscribe to a diverse array of briefings on our website, 6dobrief.com. Regardless of your location, you can conveniently receive 6Do Brief via email.
Lights dim, voices loud, headlines flashing wild. World in a frame and now, stories told, it's time to plow. Eyes glued, truth pursued, understanding woven through. Heartbeats race breaking through, knowledge spreads the new view. Breaking the news, breaking the day, truth and insight our way. Every story, every place. breaking the day, truth and insight our way. Every story, every play, living clear we convey. Every story, every play, and clear we depths revealed, voices bright, news in focus, black and white. Every angle sheds some light, morning, evening, through the night.